Here's an interesting fact. If history repeats itself, rising interest rates will mean that property prices also will rise, not fall. In fact, if recent history does repeat, house prices will double during an extended period of multiple interest rate rises. Now let me explain what I mean by that. It's finally come to pass that the long predicted rise in the official interest rate has arrived, with the Reserve Bank increasing the cash rate by 25 basis points. And the major banks have followed suit, with blinding speed of course, to deliver an equivalent rise in mortgage rates. Now commentators have been speculating for more than 6 months that interest rates were about to rise at any moment. Now they can feel smug that they've finally got it right, even if their timing forecasts were highly inaccurate. Now what inevitably follows will be more speculation about the next rate rise, and in particular about what effect this will have on property prices. There's already lots of commentary around predicting price drops of as much as 15% based on one interest rate rise. There are a lot of so-called analysts out there making these sorts of predictions, but with no actual facts to support their view. And I have to wonder where they source their information. What factors are they taking into account with these sorts of forecasts? And how do they reach such a definitive number for an Australian property market which is anything but generic? And by that I mean they're not taking into account the many regional differences in markets across the nation. Unfortunately, no one in media ever challenges these pronouncements because journalists love a sensational negative, and they never ask any hard questions of the economists forecasting a big drop in house prices, or they never examine the track record of these economists in forecasting property price outcomes. If they did, they would discover that most of them have a track record of getting it spectacularly wrong with their price forecast, including 2 years ago when most of them predicted a collapse in house prices because of the onset of COVID. So media cheerfully recycles these empty predictions that prices will fall because of rising interest rates, and eventually, once this has been repeated often enough, it becomes accepted as fact. What they should do is look at recent history and ask the question, what happened in the past when interest rates have risen? Because if a single interest rate rise or even multiple rate rises did result in a big drop in property prices, it would be absolutely unprecedented. We've never had an instance where a rise in interest rates has caused prices to fall, let alone by 15%. History shows us that when we're in the midst of a major upcycle in the market, which we are right now, a single increase in interest rates does nothing to slow it down. 5, 6 or 7 increases might, but 1 or 2 certainly won't. Now ANZ Bank recently commented about the last time we had an extended period of rising interest rates in Australia, which was between 2002 and 2008. And between those two dates, that 6-year period, the standard variable rate for home loans increased 22 times. And over that 6-year period, 6 out of the 8 capital cities produced more than 100% house price growth, and many regional locations were even stronger than that. But let me repeat that. Interest rates rose 22 times over a 6-year period, and over that 6-year period, house prices doubled in most of our major cities. So against that backdrop and all the evidence of recent history, I would challenge the many economists and journalists at how they are arriving at the notion that property prices will drop because we have a single rise in the official interest rate. Until a few days ago, our interest rates were the lowest ever and amongst the lowest in the world. Now they're slightly higher than the lowest ever, but not by much. New Zealand has had 4 recent interest rate rises, while the United States has had several also, as have many other nations around the world. So by global standards, we're relatively well off in this country. And there's nothing about this rate rise which will have any devastating consequences for Australia's property markets. Borrowers may not like paying more, but the majority have been assessed on their ability to repay their mortgage at much higher interest rates than we have at the moment. You don't get a loan in this country unless your figures show that you can afford to repay it at much higher interest rates than the current level. That means that mortgage rates could actually double, and according to the buffer system, which is part of the lending process, most households should be able to comfortably repay their mortgages. There's also the reality that most households are well ahead on their mortgage repayments. In fact, a third of households with mortgages are more than 2 years ahead with their loan repayments. And we have record levels of savings in people's bank accounts thanks to the COVID lockdowns and other restrictions. So Australia's in a pretty good place to absorb any future interest rate rises. So don't be alarmed by an alarmist media. Most of those forecasts will be proven yet again to be completely wrong.